Good morning, gas buddies. I was running late to this, but I only had to come from the kitchen. So like many of you, and now some added excitement is that the tornado sirens decide to go on here in Chicago first thing in the morning. It is 10 o'clock. Nothing special is happening, but if you can hear that siren, don't worry about it. Everything's fine. So here we are, April 7th. This is day number 642 of quarantine, or at least it feels that way. And we're here to answer more of your questions and talk about gas prices. That's basically what we do here at GasBuddy, is keep you in the know. So today's focus is FAQs. Where do we go from here? Like I said, we've been at this for quite some time. So let's get some of those frequently asked questions answered based on where we are here this morning. So the first question we have, a lot of folks have been asking us, are gas prices still going to go down because of the coronavirus right now, as of April 7th? Will we keep going down? And the short answer is yes, I think we will keep going down. Now, what we've noticed is some oddities across the country. Some areas have actually slowed down their decreases. I don't know if it's because gas stations are uncertain what lies ahead, but nonetheless, we should continue seeing prices go down. You've probably heard a lot about this potential meeting between Saudi Arabia and Russia. I'll get to that in a minute more so. But for now, there's no reason to worry. Gas prices are still going to go down. But that leads into, where do we go from here? How much longer? It could be a matter of a few weeks, maybe longer. I think the bottom line is twofold. When we start to see life return to normal, when people are driving to school, maybe not school, but work, when demand for gasoline starts to go up, gas prices will probably eventually rebound. But the other headline now to focus on, Russia and Saudi Arabia, what does it mean? President Trump tweeted last week he'd like to see higher oil prices. A lot of people are thinking that, hey, that means that oil companies are going to raise prices. So let's cover that. Well, first of all, oil companies don't get to set prices. The market does. And that's why prices have fallen so substantially. The cards are in your hands as consumers because most of us have stopped driving. Prices have fallen. It's not because oil companies are just lowering prices. It's because you and I are staying at home. And again, now to focus on Russia and Saudi Arabia. There was going to be a meeting yesterday, and for many of those of you keeping track, there's kind of a rift between Russia and Saudi Arabia. That meeting did not happen yesterday. It may happen later this week, maybe tomorrow, and that's what we're keeping an eye on. But the news is if they do cut oil production, it's not unexpected. In fact, at this point, it's expected that there will be some form of production cut. Why? Because the price of oil is so low that we're starting to see countries that produce oil be afflicted by this. In fact, the first company last week in the US, oil producer, filed for bankruptcy protection. The longer oil prices remain lower, the more risk we have of a slingshot down the road. And of course, nobody wants to see a slingshot in gas prices down the road. But it's likely that Saudi Arabia and Russia, maybe the US and Canada, will cut production, but it still doesn't mean an end to the low prices. I think no matter what, at this point, we're going to be talking about gas prices this summer that are way lower than we previously expected. For those of you who read our 2020 fuel outlook we published in January, we expected the national average this summer to be in the $2.50, maybe as high as $2.80 a gallon range. Forget that, out the window. Now, even if Saudi Arabia and Russia do cut oil production, we may see the national average hang out closer to $2 a gallon. So there's some good news here. Even if life does return to normal, we may see gas prices struggle this summer to reach $2 a gallon, even if they do cut oil production, which could happen. So don't let the media fool you. Even if there is a cut in oil production, it's actually a bit healthy if that happens because oil prices are so low now that U.S. oil production may be going offline. All the metrics we look at indicate that oil production will decline if oil remains this low. And that's not a good thing if you want affordable gas prices in the years ahead. So now that we've covered Russia and Saudi Arabia, if they do cut oil production, it's not the end of the world. We're still expecting low gas prices this summer, even if they do cut oil production. So, number two, we've talked about if they come to an agreement, cliff notes there is gas prices may go up a little bit, but still this summer is going to be cheaper than expected. Number 3, what are gas prices on the West Coast? Why are they so high compared to other parts of the country? Well, good question. You remember back just before coronavirus, if you can remember that far back, there was a big fire at a California refinery. It shut down the 401. I'm not from California. Hopefully I got the highway right, that it was the 401. But there was a refinery fire that pushed prices up. Right after that, coronavirus really started and took hold here in the US. So now California is kind of racing to catch up along with the West Coast because that refinery started pushing prices up, and now they're starting to come back down. So California's got a long way to go. Average prices there could fall another 50 cents, maybe another 75 cents, but they will catch up to the rest of the country. So don't be worried if you're on the West Coast. Prices are going to fall more in your neck of the woods than probably anywhere else in the country in the next couple of weeks. Okay, the next big question, what is going to happen this summer? Like I delved into a little bit, it kind of varies depending on what happens with this production war. But my best guess is we will probably see a production cut. That won't be the end of the world. This summer, should the situation start to improve, which maybe it looks like it will, I think gas prices are going to be far lower than where we expected them to be when we issued our forecast in January. And like I said, we previously expected summer gas prices nationally to be between $2.50 and $2.80. That would put most of you somewhere in the mid to upper 2s. It would put California in the mid 3s. Now I think with the coronavirus, most states should be somewhere between $2 and $2.20 a gallon, maybe $2.25. That would put some states, the low price states, probably somewhere under $2 a gallon this summer. That would put California probably in the upper $2 a gallon range this summer. And all of it is because this has dented demand for gasoline so much that it's going to prolong the effect perhaps for another 6 to 12 months. So even when this is over, yes, prices will start to go up, but we're talking about prices this summer that are still going to be lower than we previously expected. So there's the answer to that, and it's good news for you this summer. Hopefully all of us can get out and enjoy the low gas prices this summer. The more of us that do that, I'm sure the higher prices will eventually go because that's supply and demand. Now, part 2, a lot of you have been asking, and a lot of metrics have come up. How does this compare to the recession? Because we're starting to see gas prices get to the lowest level since the recession. Well, we may be in a recession today. It looks like a lot of people are staying home. Obviously, people have lost jobs, businesses are closed. And what we're seeing today is very similar to what we saw in the Great Recession. Prices fell significantly in a very short period of time. That's what we're facing today. Except today, the difference, I think, is that these low prices will stick around longer than they did during the Great Recession. And the difference is that today, compared to the recession in 2008, the US is producing almost 8 million barrels of crude oil more per day than we did back then. And so instead of prices going back up significantly after the recession, this time it's going to take them a lot longer to go up even a smaller amount. So we're in a much better place this time around than they were during the recession. Prices will maybe not fully recover for months. So having said that, I think we've covered all of our bases today. It's looking good for you if you're going to be driving this summer. Hopefully you're feeling a little bit more optimistic about the whole situation. If you have any questions, I've been watching them come in. I'm not ignoring them. We wanted to certainly cover the bases here. So if you have any questions, feel free to throw them out there. We have a moderator who's doing a terrific job. Thanks, Jessica. Looking at your questions, and I'm going to quick delve into some of them here. Brian apparently earlier asked, what makes up the cost of gasoline, taxes, oil distribution, etc.? That's a really good idea, or a really good question rather. Most of it, usually about half of the cost of gasoline is the price of crude oil. Taxes are about 52 to 54 cents a gallon depending on what state, and that's all your taxes. Of course, keep in mind of that, about 19 cents is the federal gas tax. The rest of it is state and local taxes. But if you're in California, total taxes are about 80 cents a gallon. Distribution, marketing is usually 5 to 10 cents per gallon. This kind of segues into another question I've been asked. Who's making the money here? Are oil companies? Who's doing the best? And to be honest with you, oil companies are not doing very well at all. The companies that refine oil into gasoline are not doing very well at all. It's the gas stations this time around that are doing better than they usually do. But of course, there's a lot of uncertainty with their businesses, how long they're going to stay open, if they can employ people. Obviously, people aren't filling up as more. So it's the gas stations. It's what we call their margin. Their margin is doing pretty good right now amidst this all. And so prices that have come down, basically stations are passing along their lower price. So Michelle Rena asked a question, why do gas prices vary so much across the state, for example, Ohio and Michigan? That's a good question, because a lot of this comes down to one word that sounds very simple, but it's really loaded: competition. Some stations may lower their prices much quicker. If there's a Costco or a Sam's Club in town, they tend to be more aggressive. So there's a lot that's loaded into that word. Where you live, the average income of where you live, how many stations are around you. Stations have incredible power right now, not normally, but right now stations have a lot of pricing power, meaning that it's their decision how to price gasoline. In some cases, you're finding that some areas are less competitive than other areas, and it may be because incomes are higher, maybe the station doesn't sell as much gasoline. Keep in mind, if you're in rural America, we've seen prices come down much slower because gas stations don't have as good of access. They're not refilling their tanks at those lower prices. So for those stations, it's been very hard to pass it along. But really, there's not a whole lot of rhyme and reason sometimes to competition, and that's why Wisconsin was one of the lowest priced states this morning, 94 cents a gallon. It doesn't make a whole lot of sense, but there's a lot of competition there this morning. So with that, I'm going to say and wish you all a very healthy future. I hope you're all hanging in there. Of course, if you need to shop around for gas, of course, the GasBuddy app is there. If you or a loved one is suffering with a job loss and needs gasoline, keep in mind GasBuddy's payments card, Pay with GasBuddy, offers you savings on every gallon with deal alerts up to 25 cents a gallon off. Just go to pay.gasbuddy.com. But otherwise, stay healthy and optimistic, Gas Buddies, and we'll see you soon. Have a great Tuesday.